Hi Tim, how are you?
I'm well, thank you, Olga. Yourself?
Good, thank you. Thanks so much for joining us. I thought it would be a really great thing in part of what we're doing with some of these videos for you to come on board and tell us a bit about Radium Capital because its solutions are unique. And I think it's a really amazing example of a specialist that can help people in certain situations.
Fantastic, and thank you for having me. Really looking forward to the discussion today. So, Radium's a finance company, and all it does is lends money to customers who are eligible for the R&D tax incentive. So the federal government offers an incentive to companies to encourage innovation. So for every eligible dollar they spend, the federal government will give them 43.5 cents back. So if you imagine someone has $1 million of eligible spend, they'll get back $435,000.
And so, do you jump in the gap? So, when they've lodged the return, and then there's a time period before, or they've lodged the application, sorry, and then there's a time period before that money comes in, that you will lend that money in that gap?
We absolutely do. So if you imagine you start spending on the new financial year, typically 1st of July, you go through to June 30, you get the 43.5 cents back once you've lodged your tax return has been processed by the ATO. So there's a gap there of roughly 18 months, depending on how organised our customers are. So what we're doing is we're lending the money they're going to get back during the financial year. So it's a form of bridging finance, if you like. So they're accessing what they're going to get back from the ATO earlier, which then allows them to continue their R&D journey and hopefully get to commercialisation faster.
Yeah, no, that's brilliant. So one of the things that's been in the media a lot lately, and that we hear a lot, is, "Oh, don't worry about paying the ATO. You can use them like a small business bank." And there's been very specific press releases, and a lot of the work that we're doing is that the ATO are not a small business bank, don't want to be considered a small business bank, and their interest rates sit at 11.34% compounded daily at the moment, and you're not guaranteed to get that interest back. So I think a huge thing is educating different business owners and advisors on what the options are, like your funding, which would then help with cash flow, which would mean that they would actually be able to keep up to date with ATO payments.
Yeah, absolutely. And so one of the our key security on our loan is we actually take the tax return as security. So we can't have our customers having tax debt. That said, we can pay out tax debt up to 60% of the loan value. And interesting because most of the people I speak to who are on a tax arrangement with the ATO don't think they're paying interest. I think they're just in a space, they're so happy to get into arrangement, get the tax man off their back, that they don't think that they're actually paying interest, but they are. And it's quite, and when it compounds daily, it's expensive.
Yeah, absolutely. So we hear a lot, "Oh, well, can't you just get me an interest-free payment plan? The guy down the road, he's got one." So the only time we saw interest-free payment plans was during the height, I suppose, if you want to call it that, of the lockdowns during COVID. But otherwise, the ATO don't provide interest-free payment plans. And as I mentioned, there was a perception that once the full debt was paid, that you could just ring up and say, "My debt's paid, can I have it back?" But the way it actually works, and a large component of the work we do, is there has to be a very detailed written application with what the ATO have as legal practice statements, their laws about what they're allowed to take into consideration and what they're not, but it's not just an automatic right. I think one of the interesting things that you just said then too around that is the security. So a lot of the time, especially people that we see that have ATO debt or that have debt elsewhere, their house has already been the equity in their house is already maximised. So I think that's really important, that the security that you're looking at is not actually an asset, so like a property or real estate asset.
Yeah, no, and it's deliberate. So most of our competitors will take what's called a general security agreement as security. And what that means is in the event of default, that particular lender has the rights to all assets of the company. We don't actually want to do that because we like the fact that our customers, if they need to borrow elsewhere, they can. So we just take the tax return as security. And that gives them the flexibility, if they need to get other forms of finance. It might be cash flow lending, it might be debtor finance, whatever they need at the time.
And a big part of that too, and a lot of what we're seeing at the moment is if people haven't paid their tax on time and they're like, oh, well, we haven't heard from the ATO, so it'll all be okay. We'll just sort of run the gauntlet. Is the ATO now have the power to issue credit reporting notifications. So if a debt is more than 90 days overdue and more than 100,000, they can then get a credit reporting notification. So again, looking at these funding options or being in a position of compliance is actually protecting these clients.
Yeah, and that change is really interesting from a lender perspective. If we were doing credit searches and someone had a default from the ATO, it's an automatic no.
Those defaults can be fixed. So that's also really, people are thinking that once they've got a default, it's game over, or they don't even know that they've got the defaults. So they can actually be rectified with the right help and with a compliant arrangement. So it's also interesting though when you're looking at other solutions that that's a complete no and the impact that that has.
Yeah, and when I say complete no, I probably should unpack that a little bit and say that if they've rectified it, then it's not a complete no,
Yeah.
but it's still a big red flag. If they've got to the point of getting defaulted by the ATO, then there's going to be a whole lot of things that any lender, not just us, would want to check and make sure the health of the business.
Yeah. And I think that goes further to that for lenders and also the ATO. A huge issue now that is on both of those parties' radar is compliance, and a history of compliance. So it's a big change within the ATO going back and looking at how many payment plans, say, a client has had, how many have defaulted, whether the debt's gone up, whether the debt's gone down, whether they've been close to legal action. And that whole gamut of the history of compliance is now taken into account when they're looking at payment plans. But that's obviously something that you're looking at as well, which is that either compliant or non-compliant history, and then the ongoing effect that has of burying your head in the sand and not doing anything.
Absolutely, and so part of what we do, but most lenders do, is we'll have a look at what the integrated client account, which is pretty much just GST and the payments, but we look at a 12-month history. So we want to know that there's no tax outstanding, but we also have a look behind for the last year or so, just to see how they've been tracking. So are they just not, have they been really behind for a long time and just happen to be up to date now? Or have they been up to date and the pattern and the behaviour is consistent?
Yeah, and that pattern and behaviour is such a huge factor. And I hear a lot of clients say, but we've changed now, we've got better and we've got a new CFO or we've got a new bookkeeper or we've changed accountants or we've got better cash flow. But that history is really affecting moving forward. And one of the big messages that I've been talking about a little bit left of field is you've got to eat the frog. So that's sort of a theme of mine at the moment, that you can't keep your head in the sand and you've got to really face the thing you don't want to do. But I think it's important to know that it has ongoing ramifications in a number of different areas when you're not taking proactive action and getting the right advice. If a client's gone to another lender and it's been a no, does that affect them when they come to you as well?
Not necessarily. So we're quite niche. So because we're only lending against the R&D tax incentive, so they may have gone to another lender, and part of being eligible for the R&D tax incentive, one of the criteria is you've got to be loss making. So you're not going to really attract much interest from the mainstream banks and finance companies because they're looking for serviceability. Whereas we approach it differently. So, no, they may have gone somewhere and been not back, but that doesn't necessarily mean that we can't lend to them at all.
Do you find some people don't even know you exist? That they're like, oh wow, if only I had known that there was this option.
Yeah, it's interesting, so you're talking about eat the frog. My big bugbear and it's not just about Radium or R&D financing, is make sure you do your homework, look at the values of the companies you're potentially looking to borrow from, and speak to them. Because we get people who come to us, they might have had a cash flow runway that was 12 months, and then all of a sudden something's happened and it's eaten away, and they've only got a month of cash flow left, and they're in complete panic mode. And also you can also sense that there's a mental health issue there as well. So And what they haven't done is gone, okay, if I need to borrow money from any number of different lenders offering different products, I need to do my homework. So if I do need to lend, I know where to go and who to speak to. But we speak to people all the time who've just sort of literally fallen in a hole for whatever reason, and they don't know where to go and what to do. So, and some of them we can help, but some of them we can't, because they've just left it too late.
Yep. And do you think that's too a sign of the changing times, which is my view, that people need specialist advice? So they might have outgrown who their advisors were, or that their advisors aren't aware of what's going on now out there because specialists are needed, and they're still sort of sitting with a general advisor that they've been with for a long time, and that they haven't looked outside the square, so to speak.
Yeah, absolutely. And I think someone once said to me that your primary advisor from a medical perspective might be your GP, but when you have a more serious issue, the GP is going to refer you to a specialist,
Yeah.
and there's a reason for that, right? So that specialist might be doing surgery or might be doing some other type of therapy, and same thing. Like we don't profess to for argument's sake offer financial advice or give advice, but what we do is pretty niche,
Yeah.
and there's not many organisations that do it. So
Yeah.
yeah, absolutely. I think people have got to make the time to find the right specialists that is going to help their businesses grow.
Yeah, absolutely. And that's one of the reasons why we're doing this, because my passion around people finding the right specialist to get the right help before they end up in these holes, so that we can save businesses that are viable, and that they can understand the services that are out there and get the help that they need. Generally, are there any other tips that you think would be good for businesses for what you see in the different industries, um, for moving forward? So I think we both agree that eating the frog, you cannot ignore these problems. Using the right specialists. Do you think there's anything else that would be worth mentioning?
I think, I think, yeah, and probably similar to what I've said. But if you approach lenders as if it's a job interview, so no one's going to turn up to a job interview without a resume, without having done homework on the company, the job, etc. I think approaching lenders is exactly the same. Is that you've got to put the work in to work out where you want to be, and see who's going to have the products that will best help you if you want to borrow, and just as importantly, look at their values to make sure they align with yours, because you don't want to jump into bed, so to speak, with someone whose values don't align with yours. And I think the other key thing is people are very price centric, which is fine. Price is very important. I've got no issue with that. But what's more important than price is security. So you want to make sure whatever security a particular lender wants to take is not going to preclude you from doing something down the track.
Yep, an outcome. So we see a lot as well around price sensitivity, and sometimes we would say when you're not in a payment plan, you're exposed to a whole heap of further legal action and recovery action by the ATO. But by paying a specialist to get you into an arrangement, it's a bit like an insurance policy. So I think that people are very cost sensitive, but what is the outcome, and what are you trying to achieve at the end of the day? And if it is insurance, or it does provide the protection, or it's not precluding them from borrowing in another way, really that's a cost of doing business that is an invaluable cost, so that they can keep trading, and can keep doing business.
Absolutely. And you know what? And I also speak to companies where they think they want to borrow, and when we do our due diligence, I sort of say to them, you know what? You're better off staying on your tax plan.
Yeah,
I said,
yeah,
what we're going to offer you compared to where you are at the moment, I don't think is a big enough carrot for you to do that. So, very, I want the best outcome for businesses. And sometimes the best outcome is for us not to lend.
yeah, yeah,
And if they're speaking with someone like yourself, I go, well, you actually got a really good arrangement. If you want to deal with us, I don't think your cash flow position is going to improve.
yeah.
So why do it?
And an example of where we have worked together was a referral where you couldn't do the lend, but they were at risk of further action. They had significant debt, and you kindly sent it to us. And what we've been able to do is get them into a payment plan they can afford, but there's also a huge amount of interest and penalties. So once they're compliant for a period of time, we'll be doing a detailed application to get rid of that interest and penalties. They're protected whilst we do that. Their cash flow is improving, and then once we've got that in that position, they're going to pay out the debt. And then next round, because R&D is every year, correct? Many of these businesses do it year in, year out, and we've managed to tailor the plan to match these injections of cash flow in relation to their R&D grants, so that once that's paid and once they're compliant, the next round and the next year, then it's an option for you guys to lend.
Absolutely, absolutely, and that's something we see a bit. Or companies will come to us and they do have a significant tax debt, which means we can't lend money to them. But our ethos is to try and help them to get into a healthier position.
Yeah.
And whether or not they come back to us and borrow doesn't matter. But it's all about, we have a huge network of where we can have people come in and as we talked about earlier, and get some experts into the room to say, oh, how do we get you from where you are into a far healthier position?
Yeah, absolutely. And I think if that's the one moral, that when you have the right specialist with the right values, I really think I resonate with that and think it's super important. If we've got the right values, we're all here to help businesses. We want to save them. We want to provide them with options. We want to help them so that they can keep trading, because the last few years have been so hard. And I don't think we're out of the woods yet. So if we can all work together and help businesses, I think that's a good day's work done.
No, absolutely, and you know what? We're not out of the woods. So we're a calendar year, financial year company. Last year we did 630 transactions. Probably 1 in 3 had a level of tax debt.
Yeah, yeah.
So I think following COVID, there's been let's just use the tax man as an overdraft. And that's now coming to an end, because if you see all the rhetoric from the ATO, is they're getting very strict on tax debt.
Absolutely. And I say during that period of time, I think people got confused, or it was on purpose, that deferral didn't mean disappear. And so what we saw, a lot of people were deferring their debt during COVID, during the concessions given by the ATO. However, the ATO have very specifically said that they're back in active collection mode, and those debts that were deferred are now all immediately due and payable, which I think has led to it's over double the debt now with the ATO. I think it's sitting just over 52 billion is the rough figures of what the collectible debt is now, which is what we're seeing transpiring in businesses that we're both dealing with. So there is a hard road ahead, but if they've got the right help, then hopefully these businesses will survive and go through to the other side.
People tend to bury their head in their sand, whereas if they just go and seek the right advice, there's a solution that means they're going to sleep a whole lot better at night, and be a whole lot happier within themselves, just by seeking the right advice and getting people who know how to navigate the ATO, as an example, to really assist them to get their businesses in a much healthier position.
Brilliant. I think that's actually a perfect way to end our discussion. I couldn't agree more.